You weren't supposed to notice this. Not like this. Because what happened with Pfizer isn't just a stock moving down after earnings. It's a signal, a glitch in the narrative, a crack in the wall where the real financial machine shows its teeth. Pfizer beats expectations, and the stock still falls. That should feel impossible. That should feel illegal to understand. And once you see why it happened, you will never look at markets the same way again. If you want real financial truths they don't teach, hit subscribe and turn on notifications. You don't want to miss what's coming, because the deeper we go from here, the more you'll realize the game was never designed for you to win. It was designed for you to react. Pfizer posts strong earnings. Revenue comes in higher than analysts expected. Profit per share beats forecasts. On the surface, it's a win. A clean textbook win. The kind of headline that should send the stock upward in pre-market, triggering excitement, optimism, retail buyers piling in like moths to a flame. But instead, the stock drops. And that moment right there, that moment is the entire story, because markets don't move on reality. They move on positioning. They move on liquidity. They move on what the powerful already know, and what you are only being told after it's too late. Wall Street wasn't trading Pfizer's earnings. Wall Street was trading the future, and the future, according to the guidance, wasn't good enough. But that's the official explanation, the sanitized one, the version designed to keep you calm, because the truth is much darker. Pfizer didn't fall because they missed something. Pfizer fell because the elite are already moving. Let me explain. In the modern market, earnings are almost irrelevant, not because earnings don't matter, but because everyone sees them coming. The algorithms model them. The institutions front-run them. The analysts leak expectations through whispers and revisions. By the time you read Pfizer beats estimates, the real money already positioned weeks ago. So what happens next? Retail shows up late, emotional, excited, hungry, and the market does what it always does. It punishes emotion. It harvests attention. It extracts liquidity. Because liquidity is the blood of this system, and you are the supply. Pfizer's guidance comes out slightly below what Wall Street wanted. Not catastrophic, not a collapse, just not enough. And that tiny gap is all it takes, because Wall Street doesn't care about good. Wall Street cares about control. Wall Street cares about trajectories. Wall Street cares about whether they can use your optimism as an exit ramp. This is how the silent wealth transfer works. They let the story build. Pfizer, the giant, the comeback, the post-COVID pivot, the obesity drug race, the pipeline, the key pivotal trials. They let the media drip feed hope, and when retail finally feels safe enough to buy, the stock drops. Not because Pfizer failed, but because someone needed your buy order, someone needed your liquidity. This is the part most people never understand. The market is not a scoreboard. It's a battlefield, and human psychology is the weapon. Pfizer is a pharmaceutical company, yes, but Pfizer is also a symbol, a node inside the larger financial organism. The system that prints money, debases currency, and forces capital into assets just to survive inflation. The average investor thinks they're buying a company. The elite are buying time. They are buying positioning before the next reset. Because resets are real. They just don't announce them with sirens. They happen quietly. Through policy, through inflation, through asset repricing, through narratives, Pfizer was once the COVID king, Comirnaty, emergency authorization, pandemic-era cash flows. But those flows are fading, and Wall Street is watching something else now. The next liquidity cycle, because after COVID money fades, something else must replace it, and Pfizer is trying. GLP-1 drugs, obesity injections, monthly dosing, competing in the hottest pharma gold rush of the decade. But here's what no one says out loud. These are not just medicines. These are revenue machines. These are population-scale subscriptions, and the elites love subscription models because predictable cash flows are power, but even that isn't enough. Because the market isn't pricing Pfizer's products. The market is pricing its role inside the larger institutional chessboard. The guidance missed expectations, no buybacks, no extra return to shareholders. Translation? Pfizer isn't signaling aggression. Pfizer isn't signaling confidence. And Wall Street hates uncertainty. Not because uncertainty is scary, but because uncertainty disrupts accumulation. Institutions accumulate in silence. They distribute in noise. And Pfizer earnings week is noise, so they use the noise. Retail sees solid earnings. Institutions see liquidity event. Retail thinks it's undervalued. Institutions think exit into strength. This is the trap, and it's everywhere. Look at crypto, same exact game. Bitcoin pumps on headlines. Retail FOMO's in. Whales sell into the euphoria. Then the media says unexpected drop. No, nothing is unexpected. The unexpected part is that people still believe it's random. Markets are engineered emotional environments. Fear and greed are not side effects. They are the operating system. Fear makes you sell bottoms. Greed makes you buy tops. And the elite live in the space between. They don't chase, they wait. They accumulate when you're scared. They distribute when you're euphoric. Pfizer falling after strong earnings is the same psychological trap as a crypto rug pull. Different asset, same predator. Because the real battle isn't Pfizer versus competitors. It's you versus your own nervous system. The disciplined win, the emotional lose, and Wall Street knows exactly how to press your buttons. They don't need to rig the market openly. They rig your perception. They rig the narrative. They rig the timing. A stock beats earnings. You think it should rise. It falls. Confusion hits. You feel powerless. You sell. They buy. Silent, patient. Then months later, when the stock is higher again, the media says, Pfizer rebounds as investors regain confidence. Confidence? No. Accumulation completed. That's what happened. That's always what happens. And this is why the Pfizer story matters now, because Pfizer is not isolated. It is happening across the entire market. We are entering an era of hidden repricing. Currency debasement is accelerating, debt is expanding, governments cannot stop printing. The dollar loses value quietly. People feel it at the grocery store, at rent, at fuel, but they don't call it collapse. They call it sticky inflation. Soft words, hard reality. And when currency decays, capital floods into assets, stocks, real estate, Bitcoin, gold, anything that can't be printed. And this creates an illusion. It makes people think markets are healthy. But markets aren't healthy. Markets are inflated, like a balloon. And the elite are positioning before the air shifts. Pfizer's drop is a microsignal, a reminder. The market doesn't reward performance. It rewards positioning. And positioning happens before you're invited. Pfizer also said they have 20 key pivotal study starts in 2026. That sounds bullish. Big pipeline, big future. But Wall Street didn't cheer. Because Wall Street doesn't bet on hopes. Wall Street bets on timing. And timing is everything. If the broader market is approaching a liquidity squeeze, if rates stay higher, if recession risk rises, then even strong companies become exit liquidity. This is the brutal truth. In a systemic downturn, fundamentals don't protect you. Liquidity does. That's why whales survive. That's why institutions rotate early. That's why retail gets trapped. And the media is not there to inform you. It's there to stabilize your emotions, to keep you participating, to keep you believing, because the market needs your belief, your clicks, your trades, your liquidity. Media narratives are engineered like movie scripts. Hero, villain, surprise, resolution. But the real plot happens off camera. Pfizer beats earnings, stock falls, headline says, guidance disappointed. Simple, clean, digestible. But behind that sentence is a deeper mechanism. Institutions have models you cannot access. Order flow data you will never see. They know where retail stop losses sit. They know where options gamma flips. They know where liquidity pools are hiding. And they drive price into those pools like hunters driving prey into a canyon. You feel like you're making choices. But most of the time, you are being herded. This is why finance feels so mystical, because it's not just numbers, it's psychology. The human mind is the real battlefield. Your attention is currency. Your emotions are exploitable. Your fear is profitable. Pfizer is a reminder that the surface story is never the full story. The surface story is what keeps you calm. The deeper story is what keeps them rich. Now here's the twist. Pfizer's drop might actually be bullish, not in the way you think, not because guidance was good, but because drops like this. This is where accumulation begins, when retail is confused, when sentiment dips, when headlines turn negative. That's when institutions start building positions slowly, quietly, because they don't buy when everyone is cheering. They buy when everyone is doubting. That is the elite mindset. They don't need to be right today. They need to be positioned for tomorrow. And tomorrow is always about the cycle, liquidity cycle, repricing cycle, fear cycle. Bitcoin is a cycle. Stocks are a cycle. Everything is a cycle. And if you can see the cycle, you stop being prey, you stop reacting, you start observing. Pfizer is not just a pharma earnings report. It's a lesson, a warning, a leak of how the system really functions. Good news can be bad news. Bad news can be accumulation. The market is not moral. It is mechanical. And the mechanics favor those with patience, capital, and insider-level positioning. So what do you do with this? You stop thinking like retail. You stop chasing headlines. You stop believing the first explanation. You start asking, who benefits? Because that question unlocks everything. Pfizer falls. Retail panics. Institutions accumulate. Later, it rises. Retail returns. Institutions distribute. Cycle complete. Silent wealth transfer executed. And the saddest part? Most people will never realize they were part of it. They'll think they were unlucky. They'll think the market is random. They'll blame themselves. But it was never about luck. It was about structure. And once you see the structure, you can never unsee it. The Pfizer headline is a crack in the matrix, a moment where the curtain slips, and behind that curtain is the same force shaping stocks, cryptocurrencies, and your entire perception of reality. The elite don't want you educated. They want you emotional. They want you reactive. They They want you chasing, because chasing is how you feed the machine. Discipline is how you escape it. So here's my question for you. When Pfizer dropped after strong earnings, do you think it was fear or was it accumulation? Drop your answer in the comments and send this to someone who needs to hear it, because once you understand this, you stop being manipulated. You start seeing the game. And if you want more real financial truths they don't teach, subscribe and turn on notifications, because the next chapter of this story is already being written in silence.